Welcome to the Daily Business and Finance Show. Tesla shatters Q4 expectations, oil prices surge amid Red Sea tensions, Palantir's 2024 board meeting shifts to Israel. Barclays downgrades Apple over hardware concerns, tech giants face challenges as rates rise. Alibaba makes a hefty $9.5 billion share purchase in 2023, and Nasdaq predicted to hit 20K in 2024 led by tech titans. Chevron faces up to $4 billion impairment on U.S. assets while Maersk pauses Red Sea transit following ship attack. Stay tuned after this short ad break for an in-depth discussion on these headlines and more. In the fourth quarter, Tesla exceeded predictions by manufacturing close to 495,000 vehicles and successfully delivering more than 484,500. The majority of these deliveries, a whopping 95%, were made up of Model 3 and Y. There was a significant increase in annual vehicle deliveries by 38%, with production also seeing an uptick of 35%. Currently, Tesla's market capitalization surpasses that of Toyota, Stellantis, Ferrari, Honda, General Motors, and Ford combined. The financial outcomes for the fourth quarter will be disclosed on January the 24th.
On Tuesday, a surge was observed in oil prices due to Iran's decision to dispatch a warship into the Red Sea, adding fuel to the already escalating tensions. This development follows an incident over the weekend where 3 Houthi boats were sunk by the U.S. The NYMEX crude for delivery in February saw an increase of 1.3%, reaching $72.60 per barrel. Concurrently, Brent crude for March delivery also experienced a gain of 1.6%, settling at $78.28 per barrel.
Amid the ongoing conflict between Israel and Hamas, Palantir Technologies has declared its inaugural board meeting of the year to be held in Israel, thereby expressing their backing. Even though there's a 2.5% drop in shares, Palantir maintains its alliance with the U.S. Army by securing a contract worth $115 million for AI-powered features via its Vantage program.
Barclays, the investment firm, has lowered the rating of Apple shares. This decision is driven by worries about Apple's hardware business, which includes the iPhone 15. The analyst Timothy Long has also reduced his price target for these shares to $160. He attributes this to lackluster sales and no signs of recovery in Macs, iPads, and wearable devices. Despite achieving record revenue from services in the last quarter, Long anticipates that growth will not surpass 10% in the year 2024.
Major technology corporations such as Apple, Microsoft, and Nvidia experienced notable decreases in their stock values with the commencement of the new trading year. This was largely due to a decline in bond yields and doubts surrounding Apple's fiscal stability. Barclays has downgraded its rating for Apple, attributing this decision to disappointing sales figures for the iPhone 15 and underwhelming performance across other hardware sectors. In addition, shares in Nvidia dropped by almost 4% due to geopolitical issues impacting the semiconductor industry. Other prominent tech firms also saw their stocks fall. On a positive note, Tesla exceeded expectations with its fourth quarter deliveries.
In 2023, the Chinese multinational company known as Alibaba Group repurchased 897.9 million of its own shares, amounting to a total value of $9.5 billion. This included a significant $2.9 billion worth of shares bought back in the fourth quarter alone. As a result, there was a net reduction of 3% in outstanding shares compared to the previous year. However, despite these actions, Alibaba's stock experienced an approximate drop of 2% during Tuesday's pre-market trading.
Wedbush Securities, an investment firm, forecasts a surge of 25% in technology stocks by the year 2024. This could potentially propel the Nasdaq to reach a milestone of 20,000 points. The analyst from Wedbush Securities, Dan Ives, attributes this prediction to an underestimation of swift artificial intelligence monetization within businesses. He identifies Apple, Microsoft, and Google, among others, as leading tech stocks for the year 2024. Furthermore, he expects a rise in mergers and acquisitions activity within the software and semiconductor sectors.
Chevron is expected to register a charge between $3.5 and $4 billion in the fourth quarter. This is due to regulatory challenges impacting its upstream assets, primarily in California. Despite these challenges, Chevron plans to continue operating these assets. The company also foresees losses stemming from decommissioning obligations of assets it previously sold in the Gulf of Mexico. These losses follow bankruptcy filings by the companies that purchased these assets. In other news, Chevron shares experienced a slight increase amidst rising tensions in the Middle East.
Two major shipping companies, AP Moller-Maersk and Hapag-Lloyd, have halted their transit through the Red Sea and Suez Canal due to a recent attack on a Maersk vessel. As investigations continue, several ships have been rerouted via the Cape of Good Hope in South Africa. This decision has resulted in a 5% increase in shares for both firms as booking costs for tankers taking longer diversions have risen. And that's a wrap on the Daily Business and Finance Show. Stay savvy, stay informed, and we'll catch you in the next episode. Until then, keep thriving. I'm Montgomery Jones.
And I'm Amalia Dupre. Farewell until tomorrow. Have a good one wherever you are. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.